In Turkey, moving a startup into a designated technopark changes the math of growth. You slot a coin into the machine, and the standard tax landscape is replaced by a custom-built financial engine. For approved research and design projects, the government suspends the standard corporate tax. Companies retain their full earnings, eliminate income tax withholding for engineers, and zero out value-added tax. For years, founders treated this 0% tax rate as an automatic right. They assumed having an office inside the park's physical borders shielded their revenue from the treasury. Instead of human inspectors flipping through binders, the government's algorithm continuously scans millions of electronic invoices. The algorithm hunts for specific terminology and structural accounting errors across every transaction in the system. A single mislabel input halts the tax exemption and triggers an immediate demand for explanation. Flawed data causes the Treasury to retroactively revoke tax benefits, slapping you with severe penalties and compounded interest. Surviving inside a technopark today requires flawless precision. You have to feed the algorithm the exact data it demands. The most sensitive filter in this system controls the VAT exemption. To sell software tax-free, your invoice wording must perfectly match the exact categories in the tax code. The algorithm is programmed to flag specific banned phrases. If an invoice bills a client for a test, a project service, or general software maintenance, the system immediately rejects the VAT exemption. The algorithm classifies those actions as standard commercial services, not tax-exempt software delivery. To satisfy the machine's filter, companies must use precise, approved language. Billing for an update, a term denoting a direct modification or version upgrade to the core software, safely bypasses the algorithmic tripwire and secures the legal exemption. Terminology typed into a billing system is a binding financial contract dictating your total tax liability. Beyond vocabulary, the internal wiring of your company's ledger has to be completely restructured around strict project-based accounting. Every hour an engineer works, every software license purchased, and every dollar earned must be explicitly linked to a specific approved project. Revenue generated by Technopark research must be entirely isolated from general corporate operations. Many startups pool their tax-exempt project income and their taxable commercial revenue into a single unified financial account. They apply shared overhead costs, like rent or administrative salaries, across the entire business indiscriminately. Crossing those financial wires breaks the exact calculation required by law. If the auditors cannot mathematically separate the exempt R&D costs from the taxable commercial costs, the government possesses the legal authority to completely invalidate the exemption. Strict compartmentalization of funds provides the structural integrity that prevents your tax exemption from collapsing during an audit. For the startups that build a pristine accounting structure and generate significant revenue, the tax machine enforces a built-in toll. It is a mandatory reinvestment mechanism. When tax-exempt earnings cross the legal threshold, you trigger a mandatory obligation. By year's end, you must inject 3% of earnings into a registered venture capital fund. Failure means the Treasury retroactively revokes 20% of your exemption, demanding immediate repayment with interest. This forces highly profitable tech companies to fund the next generation of founders, converting corporate tax savings into a mandatory engine for the entire startup ecosystem. In late 2023, the government rolled out a final regulatory update to ensure all these rules are followed. If your annual corporate tax exemption exceeds 500,000 lira, the state no longer allows you to operate your financial structure unsupervised. By June, you must submit a report prepared by a sworn-in certified public accountant, known in Turkey as a YMM. A YMM is a top-tier financial auditor, authorized by the state to certify corporate tax declarations. This external audit is the ultimate proof delivered directly to the Ministry of Finance. It verifies that your project costs, your invoiced vocabulary, and your mandatory venture capital investments are perfectly aligned. A 0% corporate tax rate is a conditional reward, granted only to founders who execute flawless, verified financial engineering. Waiting for the automated risk center to detect a structural flaw in your ledger is the most expensive mistake a founder can make. Bring in professional tax structuralists from day one to build, audit, and maintain your accounting structure. In a technopark, Mastering the tax code is as critical to your survival as mastering your source code.